Good morning, everybody. Welcome to the Flow Show. Another rock and roll day in the yen. I hope you're doing fine this Wednesday morning, 24th of July. Just me, myself, and I again today. K's off until Friday, so might be a bit of a shorter show than normal. Right, let's get stuck into things. Over at the PBOC, just keeping a half eye still on their fixes. They fixed higher 13.58 up from 13.34, so still allowing things to weaken very, very slowly. It's been PMI day, so we'll get through some of the data that we've seen. We'll start off with in Japan, we had some CPI, Bank of Japan core number coming out there, 2.1%, pretty much as expected. That was from yesterday. I didn't mention it. So the PMIs kicked off in Australia, and we're seeing one of these days where one's up, one's down, and it's all changed around. So manufacturing ticked up 47.4, hardly much of a win, still deeply in contraction. Services pulled back from 51.2 to 50.8. Also in Japan, went the other way. We saw manufacturing moving into contraction, was expected to rise 5 points, but it fell instead to 49.2. Services, though, went the other way, jumping to 53.9 from 49.4. So that's good news on that front, but just shows that a lot of economies having these two speeds in between the different sectors. Coming over into Europe, some Spanish PPI data there showing another negative print, down 3.5%, not as dippy as the minus 4.5 the prior month, but still these PPI numbers, a lot of them having a minus number or minus symbol ahead of them. In France, manufacturing went backwards on the PMI to 44.1. That was expected to rise to 45.8. There was an improvement in services, though, moving into expansion, up from 49.7 expected to 50.7 and higher than last month. Germany, still a bit of a disaster there. Manufacturing moving even further into contraction, was expected to rise, be less crappy, but it was more crappy instead. Services as well, a little bit of a pullback there. Was expected to gain a point, but actually went down 1.2 points in the end. And you see all those numbers reflected in the pan-Eurozone number there. Manufacturing 45.6 backwards, services softening a bit as well. There 51.9. Over to the UK, and things looking a little bit more rosy. Manufacturing increased to 51.8. Services missed expectations, but increased over last month by 3 points to 52.4. So both of those are in expansion, and everything's ticking along slowly and steadily as far as the PMI goes, which is what we have been seeing pretty much in the UK for quite a while now. So that's a reason why the pound may still remain more buoyant than some of the others, although there's a lot of drag from the yen today. Right, coming back to Bank of Japan and Capital Economics, we're out with a piece saying that the BOJ will lift rates to 0.5% by year end. They say at its upcoming meeting, they expect to announce a reduction in its bond purchases to 2 trillion over the next couple of years, with an initial reduction to 5 trillion. They expect the BOJ to hike its policy rate by another 20 basis points. So they're looking for, we could probably say 2 hikes over the coming period, 20 pips kicking off. So we're starting to get some of the expectations coming through for next week's Bank of Japan. As usual, US Philly Fed non-manufacturing data not on anyone's calendar. That had quite a significant turnaround. So this is the services Philly Fed, if you like. That dropped to minus 10 from a positive 15.1. Employment also turning negative, minus 4.9 versus 14.6, a positive number. Prices paid also dipped back 30.2 from 24.4. Prices received went higher though, 13.9 versus 16.6. Sorry. Yes, prices went backwards, so 13.9 versus 16.6. Prior wages and benefits rose to 29.8 versus 27.6, so an uptick there in the wage metrics. Not a big number, but it's another little piece of the puzzle. We did get some housing data yesterday from the US, existing home sales, which came in a little bit softer than expected by 100k. Also confirming the drop from last month. However, median prices hit a new record. Last month was a new record, and this month is a newer record. Prices came in at 426.9 thousand versus 419.3 thousand last month. So, as much as activity sales are slowing, prices are still going up. Just means people are being a bit more choosy on what they go for, but that balance may change if we see activity dropping. One of the reasons activity will drop is if prices become too high. So we'll see how long that ratio of lower sales, higher prices can continue for. We had a 2-year note auction yesterday from the States, all pretty much tickety boo, nothing to worry about there. Good bit to cover, 2.81 versus 2.75 previously. And the take up not too bad as well amongst the different metrics, so all well and good there. Earnings have been pretty good. We've been mentioning this. We're seeing more of the traditionals, the broader sector stocks coming out with their earnings now. You had the likes of Danaher, Spotify, General Electric, Aerospace, GM, Coke, all coming in with fairly healthy numbers. UPS let the side down with some softer numbers and a bit of warning over margins, which will then coming off. Firms like UPS are worth keeping an eye on because obviously they are effectively courier companies. They are courier companies, goods transportation companies, if you like. And they have a good indicator of activity as well. You know, if people aren't shipping stuff around, it can be a sign that activity is dropping, hence why their stock's got a bit of a battering as well. Then after the bell, we had Google and Tesla, among some others, coming out with their earnings. Now, Google's a funny one. People can be really picky about these sort of things, but who am I to argue? So largely the numbers beat, but then in the details, they had good normal revenues for ads, but YouTube advertising was soft, so that was one reason to kick them in the nuts for that. There's also a lot of costs incurring for their AI offerings that they're all building up, so they got kicked in the nuts for that. So despite the numbers coming in better than expected in pretty much all the metrics, the market looks in the details and sees some things that may not pertain to decent performance later on, and so pretty much all those stocks, Google showing a big down in the pre-market at the moment. Tesla confirmed, again, a little beat on the revenues, but it pretty much confirmed that their revenues had dropped nearly some 50% from Q1, which is never good news in the first place. So they're taking a battering as well pre-market. Gold is on gold. They're keeping their bullish gold forecast of $2,700 for 2025. Only $300 away, so not much of a call for that one, but they still see gold moving higher. In politics, we just got a little reminder that there's still a mess going on in France, which they'll be trying to brush under the carpet while the Olympics are about to kick off. Just getting a headline sources piece from Reuters saying the Bank of Japan are going to weigh a rate hike next week. There we go. Well done, Reuters. Thank you very much. French President Macron has urged political parties in Parliament to reach a compromise during the coming weeks, saying that neither the left-wing alliance nor outgoing majority can apply their programmes. So stalemate remains there. He's also declined to resign once again until the end of his term. So he's going to see out the mess all the way through. Just I'm going to keep an eye on the yen because that's just hit a new low, 154.27 on the back of that headline, as you can see there. So as I say, Reuters piece saying that they're looking to hike next week, and they plan to halve the bond buying in coming years. That's a sources piece there. That's it. I've got all I've got on the news headline front anyway. Now I'm going to ask you guys and girls to help me out a little bit. If you want me to talk about any particular asset, pair, whatever, stock, commodity, then please throw it up in the comments. Otherwise, I'm just going to go through just a few of some of the things I'm looking at, rather than just going picking pairs at random and going through them. So if there's something specific, then let me know and I'll have a look at it. But might as well stay on the yen while we're here. Been saying this for a few days now, that these markets, this is flows, okay? This is not techs, okay? Your techs are having absolutely nothing to do with this stuff here. If it happens to stop on the line you've got, well done. But if the market wants to come off another 100 pips, as you can see, it will come off no matter what funny colour lines you've got on your chart. So be very careful trading this, particularly if you're trying to grab dips. If you are trying to catch that knife, make sure you have thick gloves on, and make sure you take profits when you're given any, if they come pretty quickly. So through the 155, that was a big watch area for me. It's already starting to confirm as resistance because that's where we've just dipped through on that headline. The 38.2 fib is next for me in terms of big numbers. As you can see, it's a natural support area even before this fib was created. So it's a level all on its own. Then we also had this stall point at 153.35, 36 on the way up. So keep that in mind as well. But as I say, don't trust the techs too much at the moment. And if you do, try and keep it to the bigger levels. That may be a level. The 152, I think, will certainly be a level. That really is the next doozy level down here. So if it's going to find a bottom somewhere, that's the sort of area that it may try to do so, be it for 5 minutes or otherwise. But again, don't trust it too much. Coming into a bit of more of the short term. So you can see we were just trying to head up to that 155. That's been the break point. That's where resistance is. But now that's been given a smack lower. So that's going to remain your near-term resistance level. Then a bit higher up, we might get a little bit of traffic in here around this 155.20s area. I said 156.20s yesterday was going to be an area of resistance when we had this move yesterday morning. So that's where we got up to. Here we got the move yesterday morning, and that's what we got up to, 25s, 26s before coming back down again. Similar patterns here. You just need to find where your little resistance points may pop up, and it's not difficult. It's where you found the bottom, bounced, broke, found as resistance. You know, there's no NASA science to this. You're just watching price action, watching the charts, seeing all these little levels just showing up where you had a low, broke it, held it. Low, broke it, held it, that sort of thing. So that's why I'm expecting resistance 155, 155.20s, 155.50s. Nice and simple. As for the downside, as mentioned, you know, we've just smashed that low, 153.60s at 38.2 fib. Bran, as usual, wants to know all about liquid pairs. Michael Dolomex. Hello, Marcus. Right, well, I'm going to look at Euro Sterling. Well, first things first, while we stay on the end, first things first, let's go to cable and everyone else. All these pairs are currently being pulled around by the yen, okay? That's first and foremost. Whenever you come in, start your day looking at what's going on, you need to check around your few pairs. You should have your core pairs that you can look at that gives you an idea of what wind's blowing which way. So the first thing I came in, sat down, obviously dollar yen's gone, all yen crosses have gone, and then I see pairs like euro dollar lower, cable lower, and Aussie lower, and I know that it's not a dollar move why these pairs are dropping, it's a yen move. The fact that dollar's gaining is just a byproduct of what's going on. And then you can look at who's moving the most on these moves. Cable's holding up pretty well. We've had a move under 129, got a little bit of support here around 128.80, as you can see, just again one of these break points. So we found a little bit of a bottom there, but bounce is not looking overly strong. But compare that to something like Aussie dollar, which has had a real crap out. It was only last week we were up at 68, so now we're testing and dipping under 66. So this one's really looking crappy. Again, match it off against Aussie yen, and you can see it's pretty much going in lockstep. So it's always important to know which way and what other assets might be pulling something else about, which way the wind's blowing, and then seeing who's reacting more. Aussie's reacting more to this than cable. So cable, really just got to take it, big figures, half figures. That's where we've seen action, 128.5, 129, 129.5, 130. So if you want to use the KISS formula, you can throw all the coloured lines on you want. You only really need to look around the big figures and half figures for your real moves there. Euro dollar, that has tapped the bottom of the zone at a little pokey under my 108.30 70 zone. So we're holding it for now after the breakdown. We got that breakthrough 70 pretty much straight after, bit of resistance there. Always going to mess around in the middle around the 108.50s. So this is, you need to use this zone as a bit of a pivot area. If we stay in it, then we're undecided. If we're moving out of it, then that's when you get the bigger directions. But we've had plenty of periods where we've just gone sideways in this zone, not really knowing what we want to do, having little runs lower, runs higher, not really making a direction. It's only when you really start to get a move under, that's when you want to see it holding like this. This is still a bit messy, but obviously it's broken and it's gone. But now here we had a break and then it held. All of a sudden it's breaking down now. So look for a hold either side of this, and a bit of nonsense in the middle where it doesn't really show you anything at all. Euro sterling, this one I'm still short. Another one, it's still holding the 84s just about. We had a little nose below yesterday and today, just below the big figure. So again, this one's stuck in the trap still. We've tried to move above, didn't get very far. Maybe we're going to have another look towards these lows. If you get another hold down here, then that's going to suggest we're going to continue going sideways. But I would be worried the fact that we haven't bounced that far off of this, haven't managed to challenge any of these levels up around here. It keeps the pressure on the downside. So if we do get another move sub 84s down towards these lows, I'd be a bit wary that it was going to break. Now I'll be happy for that because obviously I'm short. But if you've been buying off of these levels, be very careful if you get down here. I still don't think any break is going to be explosive. Normally something like breaking the 84s, the 85s would be something that's a bit more explosive. It went very quickly down to 84. This break, we've got a lot of traffic down here, so let's go a bit wider. So we've got various levels. We've got all this traffic zone down here, various stop points around this 83.80s, 83.60s. So I think it's going to be a slow grind if we get under 84 and start holding. I wouldn't be expecting the similar sort of action that we got from the 85 break where it went pretty quickly. But, this one is a bit of a snail. So if I have to sit in it for a while, I'll sit in it for a while. I don't mind at all. I'll only really get worried if we're getting back up towards that 85 level. But for now, as I said, we can't really seem to bounce too far. Got the Bank of England, obviously, to come. Looking at the PMIs, just going back to those PMIs, if you take them just at face value, they showed that business increased, jobs increased, prices came down in both input and output. So if you put it in Bank of England terms, there would be enough there to signal that they could do a little cut, a little starter, like aperitif cut to get things going without doing too much damage, and that will calm the market down somewhat. So I still think we're probably the market's probably underpricing the potential for an August cut, which is happening 1st of August. But we've got a ways to go until we get to that. Right, Kevin, I'll have a look at that. I'll see if I've got that up on my screen. Dollar MEX, Michael. Let's go in on dollar MEX. Now this is all part and parcel of, again, what's going on in the yen. Obviously, if we're seeing big moves in the yen, you're going to see the other side, the carry side of things, really getting hit. So if we look at dollar MEX yen, you can see again that this is all dragging the MEX around. I've got it there. So as far as dollar MEX goes, it's a similar picture. MEX weakness driving this one higher. Where are we? There we go. 1821 was a bit of a level. We're through that. We're just trying to hold it as support. We've had a couple of little tests. It's not, I wouldn't call that confirmation yet. It's sort of half confirmed. But again, just the same as you can't trust your levels in yen, you can't really trust these because a lot of these are being driven by other things. So they're not moving on their own fundamentals. They're not moving because something's happened in the US or something's happened in Mexico. This is happening because of what's going on in the yen. So it becomes, for me, I have a lack of conviction trading some of these because of the driver. It's coming from an external driver, if you like. So it's not part of the fundamentals. Now, that doesn't mean you can't trade it and you can't trade the tech levels because this isn't a yen pair. It's a dollar MEX pair. So the techs may have a better say in things because what happens is, and it's a bit like when yields move and dollar follows yields. If you get a big move in yields, you can get a big, let's call it, say, US yields, you can get a big move in the dollar yen, for example. But there will come a point where the currency will hit its own fundamental levels, where the market goes, hang on a minute, that's going too far, irrespective of the yield move. And then it runs into resistance, support, whatever. The market goes, that's a level I'm waiting to hit it at, I'm going to hit it at. And you see the move breaks down versus what's happening in yields. The same thing happens with this. Because this is an external factor, the yen pulling it around, you can trust your levels because let's say we get up to 1850, a big old level, that may be a level where there's plenty of people going, I don't care what the yen's doing, I'm going to hit it there, whatever happens. So you can trust the levels a bit more. You can't trust the reason why it's going there, but you can trust the technical levels a bit more in this because it's not a yen pair, even though it's driven by the yen. I hope you understand what I'm trying to say about that. So if we get a move here, 1850s, I may even decide to give that a little knock, give it a little try. We know it's a big old level, goes back way further than that, as you can see. So, that's juicy for a technical trade, whatever's happening in the market. So I'll be looking at that. Let's see if it gets there or if it doesn't. Otherwise, I'm not really inclined to trade this right now. My main downside level is still that 1740. There are levels to trade here, but I'm going to just sit back and wait for some of these bigger levels, I think, and let it do its thing in the middle. Right, let's have a look. I don't know if I've got that on there. Let's see. I've got the 2 years on there. Oh, there we go. I don't know if you've got a trading view contract for this one, Gav. I'll mainly just stick to looking at yields. What are you up to in this one, mate? You're looking at, got a range 120.20 down to 116. Yeah. I see you. I've got your number. There we go. Round about there-ish. Take off that thing. So you're talking round about there, give or take a few ticks. and down into there. So this again is where you can see correlation switched off. Yeah, you've got these prices here, and that's that's going to be indicative of some of the levels we're seeing in yields as well. If we just go and look at it from a yield perspective, we're still sitting up above the 423s, and this level still holding. I'm not sure if it's going to hold for long, because we're still in a bit of a downtrend. Some of you might be painting a bull flag on this pattern. I don't know. Not my cup of tea, but whatever floats your boat. So, but then I can't see a situation where yields are running back up to 5%, not with inflation coming down and the Fed heading towards rate cuts. So there's more chance of this going down than going higher, unless there's some sort of shock. So yeah, you can scalp in and out, mate. Range trade that. That's pretty good for that. I'll just go back to it. So we have a little look. I should have put all these in line. Where is it going? Where's it gone? Lost it again. There we go. So yeah, nice little range to scalp in that one, mate. So have at it. And you've got these little extensions up here as well, up to 122s, down to sort of 113s, 112s. So yeah, it's funny because this yields are actually not having any say anything. They're actually staying pretty quiet, given what's going on elsewhere, which again is another indication that we're getting a lot of input from the yen. Nothing to do with what's going on in the US per se. Nothing to what's going on elsewhere. So yeah, trade the range, as we like to say. Right, Aussie dollar. I'll show you that one because I've had a little. I've tried catching a knife in this one. This level down here, as I've been showing down into the 60s, 65, 80s. We've had plenty of support down here. Got through the big figure. It's not overly encouraging, but again, I'm keeping it pretty small, pretty tight, because this isn't being driven particularly by what's going on in Australia. So we've hit this 50 fib. We've had plenty of support down here. Take it from the big figure down to, call it 65.80. So there's a nice bit of confluence, a nice little zone here to rely on. We've had former action here as well around 65.85. So again, even before you needed to draw this fib, this was a bit of an area down here as well. So that's why I decided to catch the knife here. I was half tempted yesterday, maybe hit that 20 area, but I wasn't sure that we were done, and obviously we're not done. So that's come down. It's, as I say, it's not out the woods yet. If Aussie yen takes another leg, this will probably keep going. But it also might be, as I've been saying, one of these areas where the market's looking at Aussie dollar and thinking, okay, Aussie yen's gone a bit far, but this is enough. This is where I need to do something. This is where all the bids have been sitting. And so even if Aussie yen goes a bit more, it may hold up here. No guarantees in anything. If we get back above the big figure 05, I'm going to be looking to start slicing some of my position off. I'm in at 05, 95, 85. So I've got 3 little bits that I put on just to cover this area. Anything up towards 15, 20, I'll start slicing and getting my stop up behind pretty pronto, just to protect, get my risk down to 0 as quickly as possible before worrying about trying to make any money out of it. But if we do bounce, big figure, a little bit more into 10, and then this 20 level is probably going to be the main key level here. And then up towards 30s, that old fib was also held up, and then got a little bit of resistance coming into it after that. Right, what's coming up the rest of the day? Let's have a little butchers at the calendar to see what's going to tickle our boat. So we got these building permits are just a revised number, so don't worry about those too much unless there's a very big change in that. We've obviously got the S&P manufacturing PMIs from the US and the Bank of Canada, lest we forget. So that's going to be the main item today, that Bank of Canada, which they now kindly moved out the way just before any data, of which we get new home sales from the US So keep an eye on that one. So what's expected? Well, we're up above 90% probability for a rate cut. So I don't think that's at risk. I think that's pretty much on the money, given what the data's done recently. But, you know, 90, 91, 92 is not 100%. So there is always a risk, no matter how small, that they decide to keep rates on hold. And that would be what the market isn't expecting. So, you know, don't take it as a foregone conclusion that they're going to cut rates. There's never any foregone conclusions in this game. So just bear that in mind. I've been talking about this level here. I've been itching to get a bit of a short in just to trade the range. And I was talking about this 137, 70, 80 area, which we were staying below pretty much all day yesterday. I probably could have made decent money just tapping it at the top and lobbing it out in the low 60s. But I sat on my hands and we've had a little break up, got up to the big figure. It's held that for now. If we do get a shove over the BOC, maybe up towards this high, I might then start to have a little go on the short side. Unless they sort of indicate they're going to be cutting 4 more times this year, it's probably going to be a 1 and then maybe a bit of a pause. I want to know what they're going to do with this divergence with the Fed that they've talked about. Are they going to embellish on that, tell us whether they're getting close to a limit, because this would put them nearly 90 basis points lower in rates than the Fed. So obviously another cut after this expected one would put them, you know, over 100 basis points. Is that too big a divergence? And they've been talking about, they talked about the limits to that divergence without putting any numbers on it when they cut in June. So I expect, as we've got a presser, the markets or the press are going to push them on that. I hope they push them on that and ask them, are we close to the limit? And if it is, it means that they may go on hold after this cut and may not be inclined to move unless the data deteriorates or the Fed starts cutting. Now, if they are happy to keep going, that may also be, the market may take that as a little indication that maybe they've had a word with the Fed and the Fed's indicated that they will soon start cutting themselves, which would allow that divergence to stop. Because if they cut now and the Fed cut in 2 months' time, then the divergence stays roughly the same, give or take. Now, why is that divergence important between rates? And why is it something that a lot of central banks are mentioning, you know, looking at what they're going to do with policy compared to others? Well, when you get divergences, it creates flows. If you've got the Bank of Canada, who's going to potentially be at 4.5% rates by close of business today, you've still got the Fed up over 5% in rates. If you're an investor who just trades yield, as I said, you've got 87.5 pips difference now between Bank of Canada and the Fed. So money will go where there's a higher yield and where it could earn more money. So you'll get potentially further flows out of Canada into the US. So more buying dollar CAD. That in itself has implications for Canada because the weakening currency can naturally bring inflation with it. So it's like it's the same thing with currency. There's always a positive and a negative to a currency weakening or strengthening. So a lot of countries, Eurozone have said it. The ECB have said it regarding the euro. It will become something for Canada where a significantly weaker currency can bring inflationary pressures, which is the whole reason why they were hiking rates in the first place. You don't want that coming when you're cutting rates, because then you just add to that as well. So that's why these central banks talk a lot about, or will be talking a lot about, rate divergence, because there's implications from it. Okay, so that's why you need to pay attention to this, because a big divergence means potentially more flows out of CAD into the dollar or other high yielding currencies. And that's something, as I say, the central banks will be wary of. So it's never just a simple thing, this rate cutting lark. there's always implications on one side of the boat or the other. So yeah, I'm keeping an eye on this one. Still for a potential short, more for a dollar play, US dollar play, than a Canadian dollar play, just to play this range. There is no real fundamental reason why the dollar should be overly strong at the moment. So if this is being dragged up by CAD weakness, and you know, we're potentially seeing softer data from the US and the Fed still heading towards cuts, from the dollar side at least, that's what I'll be looking for to fade this strength to run into those events. Having a look at some of the other CAD pairs while we're there, if you want to stay out the way of the dollar. Let's come out a little bit more. Euro CAD, that's heading up towards the 150s. We've had plenty of resistance up here as well, so that's a big area. 151 in particular, as you can see, has been a pretty solid level. Another decent move off of the old magnet, 146, 40, 50. Has broken these highs. So again, you've got the ECB still in a cut phase. So again, if this one rallies too far, it may get to a point where people who want to be short a euro somewhere might tap it on the head and give it a knock up here. So again, for me, I'll be looking that sort of area, maybe to give it another shove. And we get it back down anywhere, back down towards the midpoint there, those 146s. I know some of you guys and girls are trading this one a lot. Euro Aussie. Oh, I'll keep doing that. There we go. So we're still messing around this up above the 64, which has been a bit of a break point. A lot of few of you people have had it on your charts up here around the 64 area. Still holding a move above there. What a decent bounce off of that. What a really solid bounce off of that level down there, that 38.2 fib. So again, this is more likely Aussie weakness than Euro strength. So again, it's another one that's being just pulled around a bit by what's going on in other pairs. So just be careful of that one rather than its own fundamentals. Quick look at commodities. Oil, it's stopped going down. That's always a bonus when the market keeps going down. It stopped doing that. So again, as you can see, the CAD was following this oil move as well. Today, it's not following this oil move. Something else is weakening the CAD, as mentioned, the yen. So this correlation might have switched off a little bit. It's not much of a bounce, but if it builds into something more, it needs to get back above 79s, back above 80s to turn this thing around. So it's still looking weak. This might just be a dead cat bounce. You know, similar position here, low, bounce, wallop. So we've had a low bounce. It's trying to build its way up. So in the intraday levels, your 77 is the number here. We had that low. It's trying to find a bit of a base ahead of that at 77s. So that's going to be your marker from here. It's just trying to run into a little bit of trouble off this area here, 77s, 60, 70s. I know Mark's going to tell me off because I'm looking at the CFD rather than the future, but you can translate it this way to the other way, Mark, rather than translate from futures into this one. I'm showing this one because it's easier. So if he's listening, Mark, to you, mate, with all love, of course. Other than that, up towards 78, 50s and the 78 figure, that's where you're going to be looking at next. But if you're below 77s, keep an eye on this low here. If we hold that, it's going to be a bit of a line in sand. So hold that, then you may have a bit more of a solid bottom in place, something for it to build on. So that's another one to keep an eye on. Right, any more for any more? Oh, hi, Stephen. You're not usually up this early. Oh, mate, you have to set your alarm clock earlier, mate, and get up. You miss all the goods in this one. You miss all the goods. But thank you anyway for your kind compliment there. Right. I'm just trying to think anything else to look at. Otherwise, we'll call it a day. I'll have a quick look at dollar China because that's another one I'm still in my longs. Oh, that one there. It's playing nicely. I mentioned yesterday needed to hold a bounce down here or hold a dip down here, and it's done that, bounce back up. This one's still a little bit of a coin toss which way it's going to go. I want it back above 730s and building on that. We've had that one move up towards 731s, this area here, so I want that to happen again. But now we are just maintaining this trend, so that's all well and good. It's probably going to be a slow thing, as we've been mentioning, but as long as it's holding above this 728, I'm relatively happy that it can go on and push on again. But if we get another test of 731s and it holds, I'm probably going to take a bit more off, reduce the position right down, maybe take some of my 727s off this area in here, just keep my 726s, just so I've got a bit more margin in the trade if it does fail up here again, because we're probably going to see a bit of sideways action. A decent range to trade. Durej, how could I forget you and gold, mate? Oh. Here we go. Gold back into the 724s. 724s, back in the 2400s. Got China on my mind. Give or take, it's held the stuff down here. It had a little mooch below. I got out my longs. I gave it a go. I shook myself out in this move. But it's holding. It's got back above. It's already starting to build support back on a 2400. So it's looking a bit more constructive. We've got a bit of a level here. Let's put this one in. We've got a bit of a level here. 2420s, which was in a level on the way up, bit of a level on the way down, and it's showing up again there too. So that's what you need to watch. Back under 24 pretty quickly, and I'll be worried about these lows again, because you don't like it price coming back after bouncing from a level. If it gets above 724, still saying it. If it gets back above 2420, look for a similar type of action where it starts to build support there, and then see what it wants to do. How's it going to react when we get up to I'll tell you what, if I say 724 once more, I'm going to end the show right now. If we get back up to 2450, that'll be the key level to watch again. It was a level on the way up. As we know, we had the prior high up there. We had support when it dipped back from the highs. It broke. That's going to be your key area. If we get above here, that'll be the one to watch. Some of you may have some traffic in the middle there, but for me, it will be what happens at 2450. 2450. Right, I'm going to call it. Oh, look at that. Managed to waffle on for nearly 3/4 of an hour. I like the sound of my own voice too much. Have a great day, everybody. Don't forget to join us on the Face Show later on, where we'll be getting ready more so for the Bank of Canada and whatnot. Don't forget, take advantage of our trader funding program offer for the month of July. If you take an assessment, you'll get a free 45-minute session with Blake Morrow, head of ForexAnalytix. So that's pretty good value if you compare the price of a coaching session with Blake and the price of a TFP assessment. The smallest one, $250. So you get the assessment and you get a free 45-minute session with Blake. You'll find details at forexanalytix.com. Have a great day, everybody. Enjoy the sunshine. You enjoy the sunshine and too, Durej. I'm just looking out the window. I've got none. Anyway, have a good one. We'll catch you all tomorrow or catch you on Face. See you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.